Rajan to deliver the 20th Lalit Doshi Memorial Lecture on Financial Sector Reforms, Achievements, Prospects and Challenges. Please welcome our speaker for today.
Good evening, and thank you very much for inviting me here. Ms. Pratima Doshi, Mr. Bharat Doshi, Mr. Saria, Mr. Kshatriya, Mr. Gagrani, Mr. Bongirwar, and distinguished ladies and gentlemen. As we have heard, Mr. Lalit Doshi was an IAS officer who passed away at the very young age of 52 in 1994. Even though his career was cruelly cut short, it was very distinguished. He was one of those bureaucrats who have constituted the steel frame of this country. And as I picked up, I didn't know him personally, but as I picked up, he always had a smile on his face, irrespective of the magnitude and the tension of the work. And let me assure you, that is very difficult, especially in the bureaucracy. Now, in these days, when work seems perpetual and overwhelming, he really sounds like someone who it would have been a pleasure working with. I have known Bharat Doshi, and he tells me that all three brothers looked alike. Well, if they behaved alike, it was a truly tragic loss, and I can sympathize with the deep shock his family must have experienced. So I'm glad that Bharat asked me to do this, and I thank him for inviting me to give today's lecture. I'm going to do a little bait and switch. You've come here expecting financial sector reforms, etc. And when I sat down a few days ago to write down a speech, I said, what, am I going to list all the financial sector reforms we promised and what's been done? My colleagues in the Reserve Bank will, groan when they hear the 5 pillars. So I thought about it and I said, maybe I should do something different. So the title of this talk is not Financial Sector Reforms, I'll get there, but it's entitled Finance and Opportunity in India. We're now approaching the 67th anniversary of our independence. 67 years is a long time in the life of man. Indeed, if you think about it, it's the average Indian life expectancy today. Since life expectancy was shorter at the time of independence, it's safe to say that most Indians born just after independence have now passed on. So it's useful to take stock at a time like this. Did we achieve the dreams of our founding fathers for freedom's first children? Or have we fallen woefully short? What more do we need to do to make that dream a reality? Now, if we think about what our founding fathers wanted, they certainly wanted political freedom for the people of India, freedom to determine who we would be governed by, as well as freedom of thought, expression, belief, faith, and worship. You will recall, you will see the words of the preamble to the Constitution there. They wanted justice and equality, of status and of opportunity. And they wanted us to be free from poverty. Now, we've made substantial progress in achieving political freedom. Our democracy has matured, with people confidently choosing to vote out governments that lose touch with their needs. Our institutions protecting the freedom to vote have grown stronger, with the Election Commission and the forces of law and order ensuring free and largely fair elections throughout the country. Political parties, NGOs, the press, and individuals exert checks and balances on public policy. And the judiciary has taken important steps to protect individual freedom. That's on the political side. On the economic side, our economy is far richer than it was at the time of independence, and poverty has come down substantially no matter what poverty line you look at. Of course, some countries like South Korea that were in a similar situation as we were then are far better off today, but let us remember that many others have done far worse. Indeed, one of the advantages of a vibrant democracy that has accompanied our growth is that it gives people an eject button which prevents governance from getting too bad. Democracy has probably ensured more stable and equitable economic growth than an authoritarian regime might have. Yet if we step back and take a dispassionate view of both our democracy and our economy, it would suggest some concerns. Even as our democracy and our economy have become more vibrant, an important issue in the recent elections was whether we had substituted the crony socialism of the past with the crony capitalism of the present, where the rich and influential are alleged to have received land, natural resources, and spectrum in return for payoffs to venal politicians. Now, clearly, crony capitalism is harmful to free enterprise because it kills transparency and competition. And therefore, it's also harmful to opportunity and economic growth, something our founding fathers cared very much about. Also, by substituting special interests for the public interest, it is harmful to democratic expression. If there's some truth to these perceptions of crony capitalism, a natural question has to be why people tolerate it. Why do they vote for the venal politician who perpetuates it? Because I said we do have democratic freedom of expression and of the vote. So here's a hypothesis, and it draws on some work done by Richard Hofstadter, a famous American political scientist, when he was looking at the United States around the turn of the 19th century. So one widely held hypothesis of why we have crony capitalism or corruption in public life is that our country suffers from the want of a few good men in politics. Now, I believe this view is unfair to the many upstanding people in politics. But even assuming that it is true, so often we see an experiment where we have the emergence of a group, usually upper middle class professionals, who want to clean up politics. But when these quote unquote good people stand for election, they tend to lose their deposits. Does the electorate really not want squeaky clean government? Now, apart from the conceit that high morals lie only with the upper middle class, the error in this hypothesis, I believe, may be in believing that the problems stem from individual ethics rather than the system we have. In a speech I have made before the Bombay Chamber of Commerce in 2008, I argued that the tolerance for the venal politician is simply because he's the crutch that helps the poor and underprivileged navigate a system that gives them so little access. This may suggest why he survives. Let me explain. Our provision of public goods is unfortunately biased against access by the poor. In a number of states, ration shops do not supply what is due, even if one has a ration card. And too many amongst the poor do not have a ration card or a BPL card. Teachers do not show up at schools to teach. The police do not register crimes or encroachments, especially if committed by the rich and powerful. Public hospitals are not adequately staffed, and ostensibly free medicines are not available at the dispensary. Loans are not freely available to those who need it. I can go on, but you know the all too familiar picture. Now, this is where the crooked but savvy politician fits in. While the poor do not have the money to quote-unquote purchase public services that are their right, they have a vote that the politician wants. The politician does a little more to make life a little more tolerable for his poor constituents. A government job here, an FIR registered there, a land right honored somewhere else. And for this, he gets the gratitude of his voters, and more important, their vote. Of course, there are many politicians who are honest and genuinely want to improve the lot of their voters. But perhaps the system tolerates corruption because the street-smart politician is better at making the wheels of the bureaucracy creak, however slowly, in favor of his constituents. And such a system is self-sustaining. An idealist who's unwilling to work the system can promise to reform it, but the voters know there's little one person can do. Moreover, who will provide the patronage while the idealist is fighting the system? So why not stay with a fixer you know, even if it means the reformist loses his deposit? This sort of completes the circle in the theory. The poor and the underprivileged need the politician to help them get jobs and public services. The crooked politician needs the businessman to provide the funds that allow him to supply patronage to the poor and to fight elections. The corrupt businessman needs the crooked politician to get the public resources and contracts cheaply. And the politician needs the votes of the poor and the underprivileged. Every constituency is tied to every other constituency in a cycle of dependence, which ensures that the status quo prevails. Now, well-meaning political leaders and governments have tried and are still trying to break this vicious circle. How do we get more politicians to move from, quote-unquote, fixing the system to reforming the system? The obvious answer is to either improve the quality of public services or reduce the public's dependence on them. In my view, both approaches are necessary. So then, how does one improve the quality of public services? The typical answer has been to increase the resources devoted to the service and to change how it is managed. A number of worthwhile efforts are underway to improve the quality of public education and healthcare. But if resources leak or public servants are not motivated, which is likely in the worst governed states, these interventions are not very effective. Some have argued that making a public service a right can change delivery. It's hard to imagine, however, that simply legislating rights and creating a public expectation of delivery will in fact ensure delivery. After all, is there not an expectation that a ration card holder will get decent grain from the fair price shop? Yet all too frequently grain is not available or is of poor quality. Now, information decentralization can help. Knowing how many medicines the local public dispensary received or how much money the local school is getting for midday meals can help the public monitor delivery and alert higher-ups when the benefits are not delivered. So information helps, transparency helps. But the public delivery system is usually most apathetic where the public is poorly educated, of low social status, and disorganized. So monitoring by the poor is also unlikely to be effective in those cases. Some argue this is why the middle class should enjoy public benefits along with the poor, so that the former can protest against poor delivery, which will ensure high quality for all. In other words, the middle class parent will go fight the teacher who's not working, and the poor child in the classroom will also benefit. But making benefits universal is costly and may still lead to indifferent delivery for the poor. Also, the middle class may live in different areas from the poor. Indeed, even when they're located in the same area, the poor may not patronize the facilities frequented by the middle class because they feel out of place. And even when all patronize the same facility, providers may be able to discriminate between the voluble middle class and the uncomplaining poor. So if more resources and better management are not always a solution, what might work? The answer may partly lie in reducing the public's dependence on government-provided jobs or public services. A good job, for example, may give a household the money to get private health care, education, and supplies, and reduce their need for public services, a good private job. Income could increase an individual's status and increase the respect they are accorded by the teacher, the policeman, or the bureaucrat. But then this just postpones the problem by one. How does a poor man get a good job if he has not benefited from a good education or good health care in the first place? In this modern world where good skills are critical to a good job, the unskilled have little recourse but to take a poorly paying job or to look for patronage that will get them a good job. So we're back to square one. We've arrived at a contradiction. The good delivery of public services is essential to escape the dependence on bad public services. So how do we break this contradiction? I think we need to go back to the drawing board. There is a way out, and it stems from this idea that money liberates. Could we not give poor households cash instead of promising them public services? A poor household with cash can patronize whomsoever it wants, and not just the monopolistic government provider. If the poor can pay for their medicines or their food, they will command respect from the private provider. Not only will a corrupt fair price shop owner not be able to divert the grain he gets, since he has to sell at market prices, but because he has to compete with a shop across the street, he cannot afford to be surly or lazy. A government can add to the effects of empowering the poor by instilling a genuine cost to being uncompetitive. That is, by shutting down parts of the public delivery system that do not generate enough demand or custom. Now, much of what we need to do to deliver cash to the poor is already feasible and possible. I understand the government intends to announce a scheme for full financial inclusion on Independence Day. This includes identifying the poor, creating unique biometric identifiers for them, opening linked bank accounts, and making government transfers into those accounts. When fully rolled out, I believe full financial inclusion will give the poor the choice and respect, as well as the services they had to beg for in the past. It can break a link between poor public service, patronage, and corruption that is growing more worrisome over time. Now, undoubtedly, cash transfers will not resolve every problem, nor are they uncontroversial. A constant refrain from paternalistic social workers is that the poor will simply drink away any transfers. In fact, studies by NGOs like Seva indicate this is not true. Moreover, one could experiment with sending transfers to women who may be better monitors and spenders of the cash. Some argue that we should attach conditions to cash transfers. For example, make them provided the recipient's children attend school regularly, and this may improve the usage of the cash. Apart from the paternalism here, the danger of attaching conditionality is that if the monitor is corrupt or inefficient, the whole process of direct benefits transfers, which aims to bypass the existing structure, can be vitiated. Nevertheless, it will be useful to monitor usage carefully where automation is possible and automatically attach further benefits to responsible use. One such benefit, for example, might be attach more credit availability when somebody uses their account responsibly and shows they can manage cash. And this certainly is part of the idea back behind the government's proposed announcement. A related concern is whether cash transfers will become addictive, whether they become millstones keeping the poor in poverty rather than stepping stones for them to get out of it. This is an important concern. Cash transfers work best when they build capabilities through education and healthcare, thus expanding opportunities for the poor, rather than when they're used solely for inessential consumption, though indeed the poor do need to consume. My belief is the vast majority amongst the poor will seize opportunities, especially for their children, with both hands. Nevertheless, if there is evidence that cash transfers are being misspent, and here we should let the data tell us rather than preconceived notions inform policy, some portion could be given to the poor in the form of electronic coupons that can be spent by the specified recipient only on food, education, or healthcare. Another set of concerns has to do with whether private providers will provide services in remote areas. My sense is if the people in remote areas have the cash to buy, private providers will find their way there. Indeed, a particularly desirable outcome will be if some of the poor find work providing services that hitherto used to be provided by public servants. Moreover, implementing cash transfers does not mean dismantling the system of public delivery wherever it's effective. It only means the poor will pay when they use the public service and command respect because of their ability to pay. The broader takeaway from all this is that financial inclusion and direct benefits transfer can be a way of liberating the poor from dependency on indifferently delivered public services and thus indirectly from the venal but effective politician. In other words, economics and politics comes together. It's not a cure-all, but will help the poor out of poverty and towards true political independence. But financial inclusion, of course, can do more. By liberating the poor and the marginalized from the clutches of the moneylender, by providing credit and advice to the entrepreneurial amongst the poor, and by giving households the ability to save and insure against accidents, it can set people on the road to economic independence, thus strengthening the political freedom that good public services will bring. And this is why financial inclusion is so important and emphasized by the RBI. So let me end with a vision of how the RBI can speed up and enhance financial inclusion of the kind I've just outlined. To my mind, financial inclusion is about getting 5 things right. Price, let me start again. Product, place, price, protection, and profit. If we have to draw in the poor, we need products that address their needs. A safe place to save, a reliable way to send and receive money, a quick way to borrow in times of need or to escape the moneylender, easy to understand accident, life, and health insurance, and an avenue to engage in savings for old age. Simplicity and reliability are key. What one thinks one is paying for is what one should get, without hidden clauses or opt-outs to trip one up. The RBI is going to nudge banks, and I am careful about using the word nudge. We're going to nudge banks to offer a basic suite of products to address these financial needs. 2 other attributes of products are very important. They should be easy to access at low transaction costs. In the past, this meant that the place of delivery, that is the bank branch, had to be close to the customer. So a key element of our inclusion program was to expand bank branching in unbanked areas. This is still something that is desirable, but today, with various other means of reaching the customer, such as the mobile phone or the business correspondent, we can be more agnostic about the means by which the customer is reached. In other words, place today need not mean physical proximity. It can mean electronic proximity or proximity via correspondence, such as the Kirana shop. Towards this end, we have liberalized the regulations on bank business correspondence and encouraged banks and mobile companies to form alliances. I see the beginnings of that these days, over and above what they were doing earlier. There is a strong move to form these alliances, especially over the USSD infrastructure. We've also started the process of licensing payment banks by putting out a discussion paper on this, and we will move forward as rapidly as we can. The transaction costs of obtaining the product, including the price the intermediary charges, should be low. So product, place, price. The price has to be low to be affordable by the poor. Since every unbanked individual likely consumes low volumes of financial services to begin with, the provider should automate transactions as far as possible to reduce costs and use employees that are local and commensurately paid. Furthermore, any regulatory burden that we add should be minimal. So with these objectives in mind, we have started the process of licensing small banks, and we're also re-examining KYC norms with a view of simplifying them. The small banks, we hope, will be local in nature, use local employees, understand local needs, and be more in touch with the local community. Last month removed a major hurdle in the way of migrant workers and people living in makeshift structures from obtaining a bank account, which was the requirement that they give proof of current address. Today, they can give proof of any address, and the bank will verify proof of current address over time. Now, new and inexperienced customers will require protection. The RBI is beefing up the Consumer Protection Code, emphasizing the need for suitable products that are simple and easy to understand. We're also working with the government on expanding financial literacy. Teaching the poor the intricacies of finance has to move beyond literacy camps and into schools, and we're trying to ensure that happens. Banks that lend to the entrepreneurial poor should also find ways to advise them on business management also, or find ways to engage NGOs and organizations like NABARD in the process. I'm glad to say this is also picking up. It's also very important we strengthen the customer grievance redressal mechanism while looking to expand supervision, market intelligence, and coordination with law and order to reduce the proliferation of fly-by-night operators. There are many of them, unfortunately, in some parts of the country. Finally, while mandated targets are useful in indicating ambition and in coordinating banks to anticipate a large enough scale so as to make investments profitable, financial inclusion cannot be achieved without it being profitable for the provider. So that's the last P, profitability for the provider. So there should be profits at the bottom of the pyramid. So for instance, in making these cash transfers, the government should be willing to pay reasonable commissions punctually for the transfer of these benefits, and bankers should be able to charge reasonable and transparent fees or interest rates for offering services to the poor. So together, I think these 5 Ps will help us on the way to sustainable and inclusive financial development. Let me conclude with the place I started, which is one of the greatest dangers to the growth of developing countries is the middle income trap, where crony capitalism creates oligarchies that slow down growth. If the debate during the elections is any pointer, this is a very real concern of the public in India today. To avoid this trap and to strengthen the independent democracy our leaders won for us 67 years ago, we have to improve public services, especially those targeted at the poor. A key mechanism to improve these services is through financial inclusion, which is going to be an important part of the government and the RBI's plans in the coming years. I hope many of you in the audience will join in ensuring we are successful. Thank you very much.